Hey everyone, welcome back to Corporate Decoder. Today we are diving into Sanford C. Bernstein Fund 2, N-CSRS's recent report, so buckle up because understanding fund performance can be more surprising than finding out your grandma is a secret stock market whiz. But seriously, we're here to break down the important parts and it's a lot easier than you think. This report gives us a snapshot of how the intermediate duration institutional portfolio, or 6 months, we're going to focus on how it did and what it owns, so it's easier to understand whether your money is safe and what is going on inside of the business. Before we jump in, if you enjoy having corporate documents turned into easily digestible insights, hit that subscribe button. And also please join our Discord community linked in the description below. This is a semi-annual shareholder report, so it covers from October of 2024 to March of 2025. If you want even more info, there's a website and phone number listed. Let's talk money. For every $10,000 you had invested, the costs were about $22. So the cost of it all was only 0.44%. That is a small percentage for the business. How did the investments do? Well, if you had $10,000 invested in March of 2015, you'd have about $11,857 now. That's not bad, but it's not amazing either. It's important to understand the performance of this business. Looking at the average annual total returns, for the last 6 months, it's down a tiny bit, like losing 0.46%. For the last year, it's up 5.73%. But for 5 years, it only went up 0 years. It only went up 0.49%, meaning it didn't go up much at all. Looking back 10 years, it is up 1.72%. It's important to remember that past performance is not necessarily a good predictor of the future. This isn't a crystal ball. All right, now for the key stats. The total net assets are about $841 million. This fund has 574 holdings, meaning it's invested in a lot of different places. The portfolio turnover rate is 89%. Now, let's see where that money is actually parked. About 27% is in government treasuries, meaning they are pretty safe investments. Around 24% is in corporate investment grade. That is still fairly safe. Then 21% is in mortgage pass-throughs. These can be a bit riskier. If you are curious about any of this, you can check out the website that has even more details. Now let's dive into the actual investments and where their money is. First, there's government's treasuries. It makes sense that the company holds $232 million here, given that treasuries are considered to be a safe investment. Looking at the second biggest investment, we can see they hold corporates, investment grade. Corporates are bonds issued by companies, and investment grade means they are seen as relatively safe. Overall, this is the second most common holding. Then we have mortgage pass-throughs. These are a bit more complex. They are essentially a bundle of mortgages that investors can buy into. Now for a brief look at the statement of assets and liabilities. Investments in securities make up $854 million. The liabilities total around $102 million, which gives them total net assets of $841 million. Now let's talk about the statement of operations. This statement shows how profitable the business has been in recent months. The net investment income comes in at about $17 million. Then the net loss on investment and foreign currency transaction are nearly $19 million, which nets out to a loss of nearly $2 million. Looking at changes in net assets, the net investment income here matches what we saw before, $17 million. The net increase in net assets from capital share transaction is at $89 million, which means the company ends up with nearly $842 million. Let's take a quick look at financial highlights. This will help us understand what's going on with the company. Total return is negative 0.46%. This means the investment decreased slightly this period. Cotton isn't exactly setting the world on fire with its performance. It's pretty average, which could be okay depending on your goals. If you're looking for a steady, safe investment, it might work. But if you want big returns, you might want to look elsewhere. The report shows a well-diversified portfolio, but recent market fluctuations have taken a toll. The low cost, at least, is a nice bonus to find. If Vinafor shows a well-diversified portfolio, but recent market fluctuations have taken a toll. The low cost, at least, is a nice bonus. One thing that I would be keeping a very close eye on is the mortgage pass-throughs. As housing prices change in the future, there could be big changes in the worth of these holdings. This may be concerning in the future, so proceed with care. Overall, the direction of the portfolio is pretty neutral. It's safe, but it may not be the best. With that in mind, what are you going to do with the information you learned today? Let me know in the comment section below, and please remember to give us a like and subscribe. Also, join us in our Discord linked below. Thanks for watching. See you next time.